Imagine raising your prices, right?
Yeah.
Like flooding the market with 12% more supply. And somehow you're selling out faster than you have in an entire decade.
That's wild. It completely defies the standard gravity of the cruise industry, honestly.
It really does. Welcome to Talk Tickers, everyone. Today we're doing a deep dive into Lindblad Expeditions.
Ticker symbol LIND.
Right, L-I-N-D. And, this company is basically proving that the ultimate luxury isn't a casino on some mega ship. It's paying top dollar to kayak past a polar bear in Svalbard.
Exactly. I mean, they are selling this totally unplugged bohemian fantasy to the consumer, right?
Yeah.
But behind the scenes, you're operating this highly complex, capital-intensive fleet with the precision of, a data-driven tech company.
Which is such a fascinating contrast. So our mission today is to translate all this Wall Street cruise jargon into plain English.
Right, and figure out if this ultra-premium adventure travel stock is actually a solid play for the retail investor.
Exactly. So, okay, let's unpack this because the top line numbers for Q2 2026, they're staggering.
They really are.
We're looking at a total revenue hitting $199.2 million.
Wow.
Yeah, which is a 19% jump from last year.
And if you break that down, it's interesting because their core Lindblad segment, the physical expedition ships that pulled in $129.2 million.
Right.
But the land experiences segment grew even faster. It was up 23% to $70 million.
Right. So both sides are just firing on all cylinders.
Exactly. And the real story is how that 19% revenue growth cascaded down the income statement.
Okay, lay it on me.
Well, their adjusted EBITDA jumped 31% to $32.5 million.
31%. Wait, so they're scaling revenue, but their profitability is growing even faster.
Yeah, because their corporate fixed costs are largely locked in. So every new dollar of revenue they bring in, it's dropping to the bottom line at a much higher margin.
Ah, I see.
Yeah, they actually narrowed their net loss to just 2 cents per share, down from an 18-cent loss last year.
2 cents. They basically broke even in a quarter where they absorbed massive capital expenses.
Right.
Because they retired 2 older vessels, right? The Seabird and the Sea Lion.
Yep. If you strip out that accelerated appreciation, they would have printed positive GAAP net income.
Oh, wow.
Wow.
So they're retiring aging assets and still defending the bottom line. That's huge.
It's impressive. Which brings us to the unit economics. Specifically, these two terms you always hear in cruise, earnings occupancy and net yield.
Right. Let's translate those. Because in the expedition cruise space, filling ships is notoriously hard, right?
Oh, yeah. You're asking people to fly to these incredibly remote, often physically challenging locations.
Not exactly a weekend in Miami.
No, not at all. Yet, their occupancy hit 91%.
91%.
Yeah. That's a 10-year high for their second quarter.
That is just crazy. And they achieved that 91% occupancy while increasing their net yield to a Q2 record.
Yeah, what was the exact number on that?
It was $12,294 per available guest night. Right. Nearly $1,300 per night per bed. And that's after taking out travel agent commissions.
That pricing power is just remarkable.
It really is. It's like an airline successfully filling every single dreaded middle seat on a flight, but somehow convincing the passengers to pay a premium first-class price for the privilege.
That is the perfect analogy. And remember, they absorbed that 12% capacity increase we talked about earlier.
Yeah, right.
They added 12% more beds to the market, and they didn't sacrifice a single dollar of premium pricing to fill them.
So how are they doing that? Who is actually funding this massive expansion?
Well, the CEO, Natalia Leahy, she spent a lot of time on the call dissecting this idea of the experience economy.
We hear that buzzword a lot.
We do, but Lindblad is basically weaponizing it. They're targeting this specific demographic of over 20 million U.S. households.
Okay.
Households with a net worth exceeding $1 million. And they're betting that this group's spending habits have permanently shifted.
Shifted away from traditional opulence. Right?
Exactly. It used to be about frictionless luxury, butlers, massive suites, white glove dining.
Usual country club stuff.
Yeah. But Lindblad's data shows the modern affluent traveler wants access. They want authentic, immersive environments.
Right. They want to, travel alongside a National Geographic marine biologist.
Exactly. And they want to come home with a story that their rich friends can't just replicate, by booking a Four Seasons.
The ultimate flex, right. It's not buying a fancy watch anymore. It's securing a spot on an itinerary that only 30 other people in the entire world get to do that year.
Yes, and you can see this psychological shift in their forward bookings.
Oh yeah, the 2028 numbers.
Right. They just launched their 2028 itineraries early, and it generated double the revenue of last year's equivalent launch. Double. People are locking up thousands of dollars in deposits 2 full years in advance.
That is an incredible cash flow advantage.
Huge. And it completely de-risks their future deployments.
Right. I noticed they talked about the Alaska Grand Slam trip.
Oh, yeah.
Hitting 8 national parks. And that sold out in, what, weeks?
Weeks. And when they added supplementary departures, those vanished too.
Unbelievable. But here's where it gets really interesting to me and where I kind of want to push back a bit.
Okay, let's hear it.
They are expanding aggressively. They're selling out. The demand is there. But what about the costs of running these massive, complex ships in the middle of nowhere?
Ah, yes. The fuel paradox.
Right. Let's talk about the fuel paradox, because management actually executed really well on shipboard efficiency, didn't they?
They did. They're optimizing routes, managing hydrodynamic speeds. They actually cut total fuel consumption by 3%.
Wait, they cut fuel usage by 3% while running 12% more capacity.
Yes. It's a masterclass in operational discipline.
But, and here's the massive but, their fuel costs still skyrocketed, didn't they?
They skyrocketed by 64% year over year.
Wow. 64%.
Yeah. Because of global macro factors, their actual cash outlay for fuel jumped by an extra $2.7 million.
So it doesn't even matter how efficient the ships are if the global commodity markets are just completely working against you.
Exactly. The global crude market is entirely indifferent to your hydrodynamic hull optimization.
That is rough. And I think that connects directly to the management's guidance, right? So there was a really weird divergence there.
Very weird. So they raised their full year 2026 revenue guidance.
Yep, to between $830 million and $860 million.
And they boosted their net yield projections. They have supreme confidence in their top-line pricing power.
Right, but then they kept their adjusted EBITDA guidance, their profitability totally flat.
Flat at $130 to $140 million.
Why the caution? I mean, analysts were definitely pressing them on this.
Oh, yeah. Stephen Majinski from Stifel called them out on it during the Q&A.
Yeah, he wanted to know why they were being so defensive with the bottom line when the top line is so strong.
And the CFO, Rick Goldberg, had a very revealing answer.
What do you say?
He basically said they are defensively modeling fuel prices at close to $100 a barrel for the rest of the year.
$100 a barrel, so they're sandbagging.
They're absolutely sandbagging. If oil cools off, they'll comfortably beat that guidance. But they are insulating the stock from future macro shocks by anchoring expectations low.
That's smart. But fuel isn't the only risk, is it?
No. If we connect this to the bigger picture, they are also buffering for geopolitical risks.
Right, like the tensions in the Middle East.
Exactly. Goldberg specifically noted the risk of canceled voyages.
And it's not even that they're sailing into conflict zones.
No, it's the tertiary effects. A regional conflict degrades global flight routing.
Oh, right.
If airspace is restricted, just getting your premium customers to some remote port in Svalbard becomes a logistical nightmare.
Not to mention the supply chain. Just getting specialized food and spare parts to those remote ports.
Exactly.
So bringing this all together for the retail investor listening to Talk Tickers, is this a bullish or bearish signal for someone holding or looking at LIND?
Well, I have a split thesis on this.
Okay, lay it out.
Operationally, I am very bullish. This is a strong accumulate or hold for investors who believe the affluent experience economy is immune to typical consumer slowdowns.
Right. The millionaires are still going to spend on these trips.
Exactly. And financially, they're making smart moves. They're actively paying down debt. Their net leverage ratio dropped from 2.7 times down to 2.2 times in a single quarter.
That's massive. And they still have, what, $12 million authorized for stock repurchases?
Yep. So they have the dry powder to support the share price if they need to.
Okay, so that's the bull case. What's the bear case?
The macro. If you are an investor who loses sleep over oil price spikes, supply chain gridlock, or geopolitical headlines, this might be a bumpy ride.
Because the near-term margin pressure is real.
Very real. They are walking a razor-thin tightrope between their own internal micro-efficiency and massive macro vulnerability.
Yeah, that makes perfect sense. Well, I want to wrap up this deep dive by leaving everyone with a final kind of lingering question.
Oh, I like these. Go for it.
So Lindblad is banking heavily on taking people to these rare, untouched places, right? Like Bora Bora and Makatia.
The ungoogleable spots.
Exactly. But as they aggressively expand their fleet, adding 12% more capacity and pump more infrastructure into these pristine environments to meet this massive demand, how long until the quote-unquote off the beaten path simply becomes the new crowded highway?
Oh, wow. Yeah, that is the existential brand dilemma right there.
It really is. Something to chew on for sure. Well, that is all the time we have for today's deep dive. Thanks for listening, and we will catch you on the next Talk Tickers.